And across borders, South Africa's unemployment rate rose to a new record high of 35.3% in the fourth quarter of 2020 from 34.9% in the third quarter due to job losses mainly in the manufacturing and construction. Statistics South Africa said the number of unemployed totaled 8 million people in the October-December period, compared with 7.643 million people in the previous 3 months. Here are the details. Here are those details and other news making headlines from across Africa.
The rate was the highest since the quarterly labor force survey began in 2008, according to an expanded definition of unemployment that includes those discouraged from seeking work. 46.2% of the labor force was without work in the fourth quarter, from 46.6% in the third quarter. Job losses in the fourth quarter were concentrated in manufacturing, which lost 85,000 jobs, and construction, which shed 25,000 jobs. On the other hand, private households, trade, as well as community and social services had recorded job gains. The COVID-19 pandemic exacerbated South Africa's labor market woes last year. Before the pandemic, the economy was already suffering from high levels of joblessness as problems such as persistent electricity cuts choked growth, contributing to poverty and inequality. Meanwhile, the European Union plans to lend Tunisia $500 million to support its budget and invest €4 billion in the coming years as the North African country seeks international help to address a looming crisis in public finances. Speaking after a meeting with Tunisian government officials, the EU Commissioner said the loan would be sent by April and included €300 million allocated last year. Tunisia's public finances were already stretched before the pandemic, and political turmoil since President Kais Saied suspended parliament and moved to one-man rule last year had delayed efforts to seek additional help. Finally, Egypt's two biggest state banks have sold 303 billion Egyptian pounds in special certificates of deposit they introduced last week at a yield of 18%. The one-year CD sold by the National Bank of Egypt and Bank Misr were designed in part to soak up excess liquidity in the economy and dampen inflation after the central bank allowed the Egyptian pound to slide by 14% against the dollar on March 21st. The currency had been mostly unchanged against the dollar since November 2020. But concerns about an imminent hike in US interest rates caused investors to pull billions of dollars out of Egyptian treasuries, bankers and economists said.